Mr. President, I rise tonight to talk about the bipartisan legislation that's before the body. It is an opportunity to provide significant needed regulatory relief, primarily to smaller financial institutions like community banks and credit unions. The Economic Growth, Regulatory Relief, and Consumer Protection Act will modernize the federal Dodd-Frank regulations to ensure that small and medium-sized banks, as well as credit unions, can lower their compliance costs, which will mean more loans to small businesses and better deals for their customers. For years, Dodd-Frank has hurt these smaller community banks and credit unions who have been caught up in this broader effort to rein in a select few larger financial institutions, primarily financial institutions on Wall Street. In effect, these smaller banks were caught in the web. Last week, I met with some of Ohio's community banks. I meet with them regularly, and they tell me these stories. Their view, of course, is that Dodd-Frank, targeted at the big banks, is actually hurting the little guys. Over the past several years, they have told me story and story about how their compliance costs has increased. A small bank will say, we used to have one person doing compliance. Now we have 3 people doing compliance. Those costs get passed along to our consumers. They also say that with the red tape and regulations and rules they live under, it makes it harder for them to lend to small businesses, which is one of the problems we have today in our economy. As it's beginning to grow, we need to ensure that startups and people that are interested in taking a risk, may not have a lot of business experience, are able to get that loan to get started. What's happened is there's been a consolidation of these community banks because of these costs. In fact, they say one community bank is becoming insolvent every day in this country because of these big compliance costs, but others are consolidating into larger banks. That may be fine in some cases, but you know what? I like these community banks. I like the fact that they're close to the people in the neighborhood. They know the businesses that are coming to them for loans. Again, it's easier for small businesses to get loans. You actually have a relationship, a banking relationship. They also are very involved in our communities. So these community banks, which are really the backbone of America's financial sector, are what this bill is primarily about. The bill on the floor this week makes it easier for them to extend credit, loans, and mortgages, and provide other products and services to working families in Ohio and around the country. The legislation does more than that, though. It also focuses on the regional banks in Ohio. These are banks that were not part of the financial crisis. They had nothing to do with it. But despite that, they have been required to live under the onerous, systematically important financial institution rules and regulations. That's the SIFI designation. It's caused higher compliance costs for them. Again, it's hurt lending to Ohio businesses. In Ohio, we happen to have 3 very big employers in the state that are regional banks: Fifth Third Bank, Huntington Bank, and Key Bank. They're all examples of well-capitalized Ohio regional banks that will benefit from this legislation. And the benefit will go to their thousands of employees, but it'll also go to their many thousands of customers. This legislation also increases important consumer protections for veterans, senior citizens, victims of fraud, and those who fall on tough financial times. Another thing I like about the legislation that's particularly important to me is it includes a specific piece of legislation I authored to make it easier for a group called Habitat for Humanity to carry out their mission of providing safe and affordable housing to those in need. Habitat's a great organization. I volunteer at Habitat regularly. I see firsthand the great work they're doing back in my home state of Ohio. The legislation is called the Housing Opportunity Made Easier Act, or HOME Act, and it simply ensures that Habitat affiliates and other organizations, nonprofits, can receive donated appraisals of the homes they build. This is a really important issue for Habitat because Dodd-Frank disallows this donated appraisal, and the affiliates have traditionally accepted the donations. That has allowed them to have lower costs. When they have to pay the appraisal fees, it increases the cost of the homes to the families that are so badly in need of affordable housing. So getting rid of this red tape is something that should be bipartisan, even nonpartisan. It's been tough for us to get this legislation moving because people have wanted to block anything that has to do with Dodd-Frank, but this obviously, I hope, was inadvertent. So in this legislation, we have the ability, again, for Habitat and other nonprofits to take advantage of these donated appraisals. Getting rid of that red tape is going to help create more affordable housing for families in need. I want to thank Chairman Crapo for including that legislation. I also want to congratulate him and his colleagues on the Banking Committee for their bipartisan work on this legislation, dealing with a very real problem we have, which is the burdens, the red tape, the compliance costs, and coming up with a balanced product that can be supported on both sides of the aisle, get through the House, get through the Senate, get to the President for signature, and begin to improve this.